Gentlemen, hello and welcome to Nadex. My name is Philip and I will be once again your presenter for today's webinar, The Market Movers, today on the 14th of March 2017. Let me just move ahead with the slide. Yeah, that's looking good. If you have a look at your webinar interface, you can see that small questions box, and right now I would appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly. And throughout the course of this webinar, please feel free to put any questions that you have on the markets, on my analysis of those markets, or on, of course, on the Nadex contracts that we suggest that one might be using to trade certain setups or not. Put those questions into the box and do my very best to answer those questions as we move through the webinar. Or if those are more advanced technical questions, I'm happy to stay after the official part of the webinar and answer your questions there. So today's session is scheduled to run for about half an hour, but as I've just said, it doesn't have to stay that way. If you have more questions, I'm more than happy to stay longer on and answer your questions. Of course, before we get started, and thank you very much everybody for the feedback on the screencast and audio, really appreciate it. Before we get started, there are of course our usual risk disclaimers, so let's start again. Please take a moment of your time to read through them carefully and make sure that you are okay with them. Essentially, this says that trading, of course, involves risk, and you should understand those risks and the instruments that you are using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be looking at the live markets which I find interesting right now for one reason or the other, and we will be looking at potential trade setups, but this is more to suggest you guys, to show you guys how certain setups might be traded for a long setup, for a short setup. This does not incline that I think that those setups are good trades right now. It's really just to show you how easy it is to put on those trades depending on your market expectations. It's definitely not a trade recommendation, so please keep that in mind. Please make sure you're okay with this before continuing with the webinar. We have, of course, another risk warning, this time coming directly from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indices, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. So that's it. Please make sure you're okay with this, and then let's jump in today's content and what we want to do here today. Building your own trading strategy. What we are showing you guys here is really just our approach to trading here at Trade with Position. We're looking at the markets from a technical point of view. We try to identify favorable setups where the odds are stacked in our favor, and doing so, we try to win more often than we lose, and if we win, we want to win bigger. This is about the probability of having a potentially winning trade, and also, of course, on the payout. How much am I risking, and how much could be my potential gain? And this, of course, can be translated into the reward to risk ratio, and those two factors together is pretty much what your trading process could and should be all about. And I want to show you how those two factors can be translated into trading Nadex contracts here. In the end, you have to find your personal trading strategy that works for you, that makes sense for you, and with which you feel comfortable. So in the end, it's about building your own trading strategies. Market scenarios, possible outcomes, and setups to consider, and market-moving news events this week. Of course, tomorrow is the session of the Fed, the press conference. I think Ms. Yellen will be speaking again, and the interest rate decision is pending, and we want to have a look at what the markets might be doing with regard to that move and how you potentially potentially could trade the news event. One of the big features and benefits of trading binary options and spreads here at Nadex is you have that limited downside, and with this clearly well-defined risk that you have when you're entering those positions. It's certain news events suddenly become tradable, where the risk of a volatile move in the market might be just too large, where usually I don't want to have a position in the market. Interest rate decision might move the market big time in either direction. And usually the volatility that comes in there is so high, it could just take out my position, and I could be wrong, I could be right in the long run. However, this volatility in between would just kick me out of my position, kick me into my stop loss. I might even take a larger loss on the position than anticipated. So usually I don't want to trade news. With binaries and spreads, that's completely different. I have a well-defined risk, and I don't care what the volatility could be in between. I have a clearly defined risk position to speculate on the outcome of that news event. And we want to have a look at the major indices and see what potential setups in the markets could be there. All right, live trading and analysis, and this is of course where we're now switching over directly once again here to our charts. And today I want to kick it off with a look at crude oil. Once again, let's have a look at what the market has been doing in the long run. And in the long run, we can see starting in 2014, this market clearly has come down. Levels of 120 long gone. However, those recent lows that we saw here, the market rallied higher around July last year, and since then we have been stuck pretty much in that range. At the top of maybe 56, 57, something like that. And if we want to put in a lower level to define our range here, I would be shooting here for this 45 level, something like that. Please, one note of caution. I'm looking here at the futures contracts, and this is a continuous contract, which means the prices of former futures contracts, of past futures for contracts, have been adjusted just to give me this continuous price series. De facto, what we see here is a virtual contract which reflects current market prices, but the history is adjusted. So, for example, if I had some fib levels on here in the past, and we switch contract now from the April contract to the next one, you might see that my fib levels suddenly no longer really meet those highs and lows that I picked before. Did I draw those levels in sloppily? No, I didn't, because due to the adjustment of this continuous contract calculation, those numbers in the end really started to change a little bit ex post. And so keep that in mind. If your levels don't look quite right on those continuous time frame charts, that's perfectly fine. That's just the nature those charts have been calculated. Now, on this level, on those charts that we see here, 56, 70 roundabout, 54, 55, 12, something like that. And how did I pick this level? Well, we can see price touched this level here. It touched this level once again there. And we have two pretty precise and exact touches of this level here as well. Here it's the closing price, here it's the opening price of those two monthly candles. So pretty much that's the range where the market has spent quite some time, beginning of end of first quarter 2016 until now. And if we come down with our time frames and have a look at what the weekly chart has been doing here, the idea was here that might be giving us here some kind of short setup. It didn't. Market pushed higher, created a higher high, higher lows, came back. Comparing with those, it's still a higher high, lower high. It's a higher low, lower high, higher low. It's not really clear what's going on there. It's really just volatility going out of the market. And by the end of last year, we had this this OPEC session in Vienna when the markets finally decided, okay, they actually want to cut their production rates, and this should lead to higher prices. And this is when we saw this push higher here on the weekly chart. However, in the end, we really continued to stay in that trading range. We never really managed to break out of that range. Lackluster action, sideways action recently, and now just recently, just a week ago, everything started to crumble and to fall apart. And if we now switch back here to our daily chart. On the daily chart, you can see now prices started significantly to fall lower. And what might be now a logical level to shoot for? Well, once again, that 45 level that we have just identified previously here, something like that. That level here on the monthly chart. This could be a potential target level for this move lower. And you can see, just looking at our moving averages here, lackluster direction. Nothing is clear. Those moving averages are all over the place. Nothing is really clear what's going on here. However, now we have broken out of this short-term trading range here, fallen back below the psychologically very important level of 50, and now we are well within this range, and price is just going lower and lower and lower. And yeah, possible next destination might be something here around the 45 level. Looking at lower time frames, this is what we can see here on those lower time frames. Beautiful downtrends on the 2-hour chart, on the 4-hour chart, on the 8-hour chart. The hourly chart recently has really had some extended sideways action here, but once again broke down, and this breakdown can easily be seen here on the 15-minute chart. And essentially, this is the type of pullback that we're looking for. Price is going lower. We're pulling back into a moving average sell zone. Would have been nice if that low would have been a little higher. It's not a perfect setup. Would I have traded the setup here right now? No, I wouldn't. This relationship here is a little bit worrisome. But apart from that, it's a really nice small bearish candle setting up in the sell zone. And yeah, I've seen worse setups being traded successfully. If it's going to work out or not, in the long run, it's always about probabilities. I want to identify as many factors as possible that suggest that this might be a winning setup or a potentially winning trade. And for that reason, only then, once I've seen all those boxes being checked off, yeah, looks like a great trade, only then do I want to enter that position. Now, just for the sake of demonstration, and just once again, please, it's not a recommendation just because you will see me hitting the submit button in the next few moments. It's not a suggestion, it's really just for the sake of demonstration. If I thought that this level here might be a potentially good short trade, how would I go on trading that potential setup here with a spread, for example? And I'm looking here, and now I'm on the Nadex platform. I'm looking here at commodity spreads, crude oil, and I'm looking at the daily, which now has about 2 hours and 17 minutes time left until expiry. Always keep in mind those options and the spreads, they have an expiry date, expiry time, which means at that point it's decision time. Where in that spread range is my is the underlying market trading, or is the underlying market trading above or below the strike price of my binary option? It doesn't mean a thing if my winning scenario occurs 1 minute after expiry. No, that's really a hard cutoff point, so keep that in mind. You have to balance time and speed and velocity of the market, and you just have to think, how far can the market move? Here on this chart, we have 2 hours and 15 minutes about left, so this should give us about, bad in math, about 9 more candles on this chart. Where could those 9 candles be taking us? What could be going on there? And if I think, yeah, the market might be continuing lower, the question would now be, what would be a spread that could make sense? And personally, we have first to note, where is the market trading? It's trading at 47.36. And as I have discussed in the previous webinars, every time that I want to trade a short setup, I want to look for a spread which is trading as close, where the underlying market is trading as close to the ceiling level as possible. And what's the ceiling level here? The ceiling here is 53, way up here, way off the chart. 48, 50, 50, 53. So if we are trading now at 47.35, I think this one here with the ceiling at 48, that might be a nice spread to have a look at. Now, let me just pretend to sell this contract one time. It's a paper trading account. It's really just once more, finally, for demonstrational purpose. So please make sure you're okay with that. All right. 47.37, and the ceiling is at 48. I can only lose, if I sell one contract here, I can only lose about $69 right now. Commission transaction fees are not considered here right now. Those are about $1, so nothing to worry about here with those figures. Maximum loss 69. However, the maximum profit on that trade could be $431. Remember, I said initially, reward to risk ratio. How much can I potentially make versus how much can I potentially lose on any one trade? That's an important KPI for me. That's an important figure to pay attention to. And obviously, risking $70 in order to make 430, that's quite okay. On the other hand, what does have to happen that you can make potentially those $431? Well, the spread is defined $43 to $48. So in order for that maximum profit to be achieved, is that price has to drop to the floor level, or maybe even beyond, but in the end it doesn't matter if it's sitting at the floor level or maybe just at $39, and only in that scenario would that be your maximum profit. On the way from the current market price to this potential new low, you participate in the market movement, and that's the characteristic of that spread. Within the price range of $43 to $48, your P&L, your profit and loss on that trade will adapt on where in that range that the underlying market will be at expiry. And once again, maximum profit is only achieved if your price closes at the floor level or even below that. So keep that in mind. No, at expiry, if it's just in there, you won't be getting those $431. It depends on where the market will be. Just keep that in mind. So I'm just placing the order now, again, just for demonstrational purposes. And another thing, this was how you could trade a spread on that market. The other question could be, okay, why not have a look at binaries? And if I look at binaries, and here I'm looking at a weekly, for example, those weeklies have 3 days out until expiry. You could also go for those which are way more short time based, 1 hour, 42 minutes, or even lower, 42 minutes. You have to pick something where you feel comfortable. Once again, it's about the speed of the market and what the market might be doing. Now, if you think the market might be going higher here, this pullback is not done yet, and this is a higher high that we see here, and this might be just a new higher low. We will see a rebound here. Everything's fair, everything's possible, nobody knows the future. That's why I'm so keen on identifying things I know, finding my way and reading the waves and reading the paths in order to identify something which gives me a certain probability. Here in this move, in the setup, I don't see it quite there yet. However, if you think market might be going higher, all right, we're trading at 47.37. A potential trade could be that we're looking to buy this contract here. This is a little bit out of the money, 47.41, however, ever so slightly. It's currently priced at 35.50 versus 48.50. And if I was to buy this contract now one time, what can I lose? Well, I can lose what I have paid for that contract. And this would be those 48, 47 bucks, which are being displayed here right now. What's my maximum profit? If the market settles at expiry in 40 minutes above the strike price of 47.41, then the payout for that option will be 100. I paid about 48 bucks for that, and for that reason, my maximum profit should be something around 52 bucks. I'm getting 100, I paid 48 for it, so something like 52. Once again, commissions and fees not considered here, but it's about the big picture. This trade now is sitting here, or that trade, and let's just place it, again, not a recommendation. The idea here is it's sitting at the money. It gives me roughly a probability of 50-50 of being a winning trade or not. Actually, the mathematical model calculating the prices and suggesting what the market might be doing suggests currently that it's a little bit below 50-50. A good indication for a rule of thumb, it's not precise, keep that in mind, a rule of thumb about the profit and probability that this might be working out is something like the mid price or the mid between bid and offer here, and this should place us here somewhere around 40 maybe, and that's can be interpreted roughly as the probability that this is could be a winning trade from a mathematical statistical point of view. So the market, the model currently suggests, okay, in 40% of all cases, that could turn out to be a potentially profitable trade. And if it is, I'm risking 48 in order to make 52. Both those aspects are balanced. I roughly have the same probability of winning as, or potentially winning as for losing. And if I win, I can potentially make a little bit more than if I lost. And those two aspects have to be balanced. If you think now, that's not good enough for me, I want to have more bang for my buck, to put it that way, let's have a look at shooting for maybe 47.80. So 47.81, that might be that contract here. And if I looked into buying that contract here, you can now see I could buy this contract for $13 per contract. My maximum loss, therefore, would be $13 if within 38 minutes the market closes below 47.81. Then my money is lost. Those 13 bucks are gone. However, if the market closes above that strike price, my payout would be 100. 100 minus the 13 I paid for it, maximum profit $87 if the market closes at 47.81 or above it. Now my reward to risk ratio obviously is much, much better than what we had there with the first trade. Risking 13 in order to make 87. That's about 5 to 1, something between 4 and 5 to 1. Outstanding reward to risk ratio, but you have to pay for that, and you're paying for it with probability. Once again, let's take that rule of thumb. The distance between 4 and 13 would be 9 points. Let's take about half of that, 4.5, add it on top of the 4, which gives us around about an 8.5% probability that this could be a potentially profitable trade. Again, this is not the probability that it's going to be like that. It's a mathematical model. It's just a rule of thumb. So for this 4 to 1 to 5 to 1 reward to risk ratio that I'm talking about here, I have to pay dearly in the probability that this could be working out until expiry. Remember, we had about a 40%, 45% winning probability rule of thumb on the previous trade. Now this has been reduced significantly to less than 9%, roundabout. So keep in mind and understand that that payoff between going for a greater reward to risk ratio, you always pay for that with a reduced probability of having a potentially winning trade on. Let's place that there. Chuck, great question. Philip, since you sold the spread, so you assume oil will go down, why did you not also sell the binary option? Thanks. I could have been doing that, and if you think that market is going down, Chuck, by all means, go for it. I want to stay here as neutral as possible and to not suggest you guys go short. By all means, go short. I want to show you how you could speculate on a long position or on a short position. My personal take here is it's not a perfect setup. That pullback was way too deep compared to this one here. Overall, however, personally, I'm more bearish on this setup here, but in the end, it's just my trading strategy and my model. In the end, you have to find a model that works for you, and if you think, no, it's mean reversion, we have to pull back even more now, then a short-term long position might be just that trade that fits your strategy. So just keep that in mind. Thanks, Chuck, for the question. You're absolutely welcome. No problem at all. All right, guys, that's it for oil. And we see that the overall pressure here is really a little bit more to the downside. And just looking at those higher time frames again, we can see that there probably is still some way down more for the action to come here. However, we are overextended now from my moving averages on the daily, which could make it a little bit more likely that we can see some kind of reaction back to where we have come from. And how can I find a possible level for that retracement? Possible level for that might be just using our well-proven fib tool, and this would show me, well, this would here just be the sweet spot between 51 and 52, and 52, the 61.8% retracement happens to sit on top of the 52 level. So if you think your trade might be a speculation on a pullback here to this 52 level, be my guest. One guess is as fair and educated as the other. So by all means, find your model and stay flexible there. All right, so much for oil. Next big event for tomorrow, of course, is the Fed session and the interest rate decision. And I would just like to use the remaining minutes of this webinar to quickly scan through the markets, see what those markets are telling me, and if I prefer one market or the other for potential setup there, considering going into the Fed session tomorrow. The Nasdaq. Strong market, strong move, especially I'm still curious why the Nasdaq is currently so strong, because after the events of November, the Nasdaq was a little bit lackluster and didn't really catch that momentum, but now just recently everything's been going higher, and good strong action in the Nasdaq. The weekly chart is now a wee bit overextended, however we have been at pretty much the same level of overextension for quite some time. But you can see here, and this is a beautiful example of a little bit of divergence setting up. We have a high here, we have a higher high here, and now something like another higher high there. Let me just see if it is. No, it is not a higher high. And you can see here, looking at MACD and RSI, we are losing momentum. Look at the angle in which price has risen. Sorry guys, don't know, at which price has accelerated here and has then started to move sideways, and yeah, we're still itching higher, but ever only so slightly. And this loss in momentum, that loss in speed, becomes clearly visible looking here at MACD and the divergence setting up there, as well as in RSI. So would I be shooting now here for significantly higher prices in the Nasdaq? No, not quite. I see some signs of weakness setting up there, so for a long market, the Nasdaq might not be my first best choice. Yeah, the Russell has been pretty weak all the time, and just looking at the daily chart here, we can see pretty much just like oil. We stayed in that range for quite some long time. All those, compare this to the chart structure that you've seen here for the Nasdaq. Clear push higher. That is not the case with the Russell, and even once the market has started to push higher, now we've just fallen back below this level here of around 1,387, and yeah, pretty much a lot of weakness. If I was bearish and wanted to be bearish an index, the Russell definitely would still be on top of my list for potential markets to look for short opportunities. Let's have a look at lower time frames here. And yeah, this just a moment here. This setup here is much clearer and better than, and cleaner. It's cleaner than the one that we saw in oil, because obviously this is a high, this is a low, this is another high. It's a lower high. Those are lower lows. All this ambiguity that we had with oil, because we had a high here, a significant high there. It's just not the case here with the Russell. And yeah, just for the sake of demonstration, let's just jump in there. And if we assume that we wanted to index spreads, US small cap 2000, let's have a look here at the daily. And if you say that market could be going lower, you could be looking here with 3 hours, 45 minutes out there, for example. And now if I wanted to short that market using a binary, I would be looking for something which is in the money, quite deep in the money. And do I think it's likely that we could see a retest of this 1,352 level? Yeah, might be. And this would be here something like that. That might be the strike price. How did I arrive at that strike price? I just picked the level of those previous lows and think, yeah, a retest might be possible. And so I could be just selling that contract here now for 85.25. Maximum loss if it doesn't work out, $14.75. Maximum profit, $85.25. And I could be just placing that order. Sorry, no idea. It's a demo account, and I just have recently logged in after some while. But that's the thought process here for picking that contract. I want to pick something which is in the money because I think price might be going lower and might be hitting that level. And of course, I could also then raise an order to close out that position early on. If I think that's the strike price, I sold this contract now for about $80, $90, something like that. If I think price might be reaching that level, if an option is trading at the money, at the strike price, it should have a price of approximately $50. So I could put in a take profit order there for at around about $50, limit order, and close that position totally or scale out of that position, however I would like to do so. However you think price might be going higher, again, you might be looking into picking an option a little bit out of the money for price to run into this one there. Keith is asking about the best day trading strategy for a newbie. Keith, my suggestion would be focus on higher time frames, give yourself more time to learn, and more time to learn the platform, more time to learn the strategy, and more time to learn about yourself. Trading for me is not so much about excitement and looking at short time frames. It's about being profitable. And trading is a craft and profession like anything else. You have to learn it, and I think you can learn fastest if you practice slowly. It's just like martial arts or anything like that. Take your time to do it properly. All right, so time's pretty much up. So if you have any more questions, please keep them coming. I'm more than happy to answer them after the official part. And this official part is now already coming to an end. Yeah, you can see here how you can get in touch with Nadex. If you haven't opened that demo account or your real life trading account, please consider doing so. You've seen how easy it is to place those trades and just practice a little bit in your demo account. Get used to the products, see how easy it is to place those orders and manage your positions. It's not fire and forget. You have fire and forget. It's full. You have full control over your positions. You can close them early. You can just trade around them just as if they were normal futures positions, normal stock positions. It's just another trading instrument. Find your strategy that works for you, and then implement those strategies here with those great Nadex contracts. Yeah. If you have any more questions, you can see how you can reach out for Nadex and be in touch with them. They are more than willing to help you there and answer all your questions. And yeah, for me, that's it pretty much for today. I hope you enjoyed it. You found it useful, what you heard and learned here today. And I would be more than happy to see you guys again next week. As usual, after this webinar, there should be a short survey, and any feedback that you do have for us is really appreciated. We're running those sessions for you. So if you have something, it would be great if you could tell us more about ABC, more than happy to do so. So once again, for me, it's been a pleasure. Thank you very much for attending and the great participation. And now to all of you, a great day. Happy trading. Thanks again. Take care and bye-bye.